All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. I just wanted to jump on here for a few minutes, talk about some pullbacks that we're seeing out there, respond to a few questions that have come in, and just briefly here, we're looking at a market today where the S&P pulled back this morning. It's actually going green right here, just slightly higher. We're seeing a lot of differentiation out there in the market, and we're seeing the Dow outperform here this morning. In fact, the Dow up 100 points here today, which nowadays is 0.3%, so not that big of a move, but overall outperformance there. We see small caps that they went green briefly, but for a lot of things, it's kind of a sideways day, a pullback type of day, especially the stocks that had really big up days yesterday. For example, Adobe, right? Was up what, $13 yesterday, pulling back about $2 here today. And one of the things that can be annoying when you're in a trade is to look at one of these pullbacks and try to assess and make anything out of it and say, all right, is this pullback something that matters? Do I need to adjust? Do I need to get out? Do I need to move on? How do I react here to this? And so just kind of want to show you how I kind of look at these types of pullbacks. When we get a move like yesterday in Adobe, it's generally a pretty nice bullish signal, right? It's something where we can look and draw the breakout and everything else. It's a pretty good bullish signal for going forward, right? But when we have these, we could even look back here in February, right? It gets this kind of 2-day pop, and then, all right, there's some of these kind of pullback days for 3, 4, 5 days before the next move, right? So how do you kind of put yourself in a position to say, hey, you know what, I'm willing to hold this, or you know what, I need to go? Well, for me, it all comes down to volume. I'm going to clean this up, get rid of all the indicators, except for volume, and we'll throw volume on here, and let's just make it colored volume just to have a little more contrast there, and I'll click on annotate. And if we look back here in February after this kind of move that we saw in Adobe, what happened afterwards? What took place? Well, we saw some pullback days, right? We saw some pullback days here, but take a look at the volume. The volume on those pullback days was lighter than the overall volume had been for the stock of late, right? And those low volumes, they tend to suggest nothing's really changing, nothing's really adjusting, right? And a lot of times when you get a bigger move, it's some sort of group of funds that are buying, and then they just take a day off from buying, right? And if you get a little bit of seller, okay, pushes it in there. You don't really want to read too much of how the stock does relative to the market, because one day it outperformed the market tremendously. And so if it's lagging the market a little bit, do you really read a whole lot into it? No, you really can't. And so it just comes down for me to volume. And when we see heavier volume, there's a greater risk of a more substantial pullback. When we see lighter volume, there's less of a risk. So let's take a look. Let's just take a look at Adobe here, and what it did here in October. Right here, we had the big pop, right? Big, nice news pop. Big volume on that pop, right? The next day, kind of had this sideways day. Gapped up a little, sold off, down a little. But, really just kind of a nonsense day. How do you look at it? How do you kind of say, what's the path of least resistance? Is my risk high to hold this, or do I get out? Well, you take a look at the volume. Look at the volume on that day. It was right up here. Is that a high volume day, or is that a low volume day? Well, relative to its history, it's not one of the highest volume days, but the volume's elevated. The volume is definitely greater than average, And what does that suggest? That suggests that the downside risk is elevated. When we look at Adobe back here, right back here, we had the lower volumes, downside risk not as elevated. Now, this isn't this is the magic formula to say, hey, if a stock's going to go up or down. But if we're looking to put the odds in our favor, the volume really, tends to help. And so I look at Adobe today, it's down $2. Okay, you know what? I can go look at Microsoft and go, oh, it's down 30 cents. Okay, Microsoft's outperforming. Something's wrong with Adobe. Or, oh, the market's flat. Well, we know, but Adobe could move $2 and end, or move $3 in a matter of 5 minutes and end up $1 today. And would that, alter a decision here on it? If it would, we're looking at it a little too closely. But bottom line, I look at it and say, what's the volume look like? Now, we are only 2.5 hours into the market, right? We're not through the majority of the day, but so far on Adobe, the volumes are non-existent. The volumes are very, very light. So it doesn't tell me that Adobe can't pull back, but it does tell me that odds still favor it to go higher, or that today's action doesn't really mean anything. Right? It doesn't really mean anything. And so in those scenarios, I'm much more willing to hold. I'm much more willing to, to say, oh, okay, it's kind of a nonsense day. All right, we'll see how it goes. And, it's one of those where, may have another nonsense day and then a nice little kind of rip and pop. And, there's nothing about today that changes kind of my ultimate price target here for Adobe. Now, do I need to rotate the option that I have or something like that? That's always something that's a possibility and something worth looking at. But in terms of, any kind of change in directionality here, there really isn't when it comes to a stock that is pulling back fractionally relative to the prior day's performance and on some really low volume. And we see that here with Adobe. Now, most stocks today that have some pullbacks, that's kind of what we're looking at early on. Nike, it's pretty low volume. We're not seeing huge volumes coming into this market. So a lot of the pullbacks here today, lower volume. You're seeing the implied volatility come out of the options. We see the VXX dropping, the VIX dropping. So, we see this implied volatility element really coming out of the options and, making them cheaper. So these pullbacks become very interesting, types of entry points. Now, I have a stock, here as well, Halliburton, that is doing something similar. And I got a note from Michelle here this morning that someone had sent in, worried about the magnitude of change on Halliburton stock. And, I understand. And yep, absolutely. But it's still holding on to yesterday's lows. There's nothing really in this technically that is, earth-shattering or really directional changing here. It's trading really kind of, within Halliburton's normal trading type of range. Granted, it'd be nice to see it rally 30, 40, 50 cents into the close. But it's still one I look at and go, okay, you know what? Fine, it's pulling back. Is there serious volume here that I need to be concerned about? And all right, if there is, I'll take it, move on, and go elsewhere. If not, I'm much more apt to hold it and just run with it with my original trade parameters. Now, it doesn't mean that, the implied volatility and time decay doesn't work, in terms of options, but in terms of just stock direction, and looking and saying, is there some major significance here? Not really. The short-term significance came this morning on the move below the 7-hour. Right? We moved below the 7-hour. All right, what's that tell me? That tells me not to expect much from it today, meaning it's probably going to be a day where if I'm staring at it, it's probably not going to be a very fun day. And I have to say, okay, you know what? Where's it coming? Well, lower Bollinger Band is that risk factor here. Okay, am I willing to hold it down to that level? And if the answer is yes, all right, great, I hold it and and go. And for me, that's the case here with Halliburton. I do want to see that level hold. I do want to see 35.50 hold, and I want to see the stock bounce off of that level here to continue to hold the position. I have plenty of time on it, but if we start breaking that level, I do think I think it's a slippery slope. And, we see most of the stocks in the group kind of doing something similar. Schlumberger's outperforming Halliburton today, but Schlumberger lagged Halliburton yesterday. If we look at the oilfield services stocks, the OIH, it's kind of the same chart as Halliburton, right? Even in terms of the action yesterday. So it's one where there's nothing really distinct happening going on with Halliburton outside of its sector over the last 2 days. It's pretty much just kind of moving with its group and with its sector there. But hopefully that gives you some insight on looking at some of the pullbacks that may be out there, like a Caterpillar, and saying, all right, does this pullback mean anything, or is this just kind of a little flash in the pan type of a thing? And I looking at the overall volumes out there, a lot of the pullbacks so far, they're just kind of flashes in the pan. They're not on any kind of nowhere close to high volume and nowhere even close to elevated volume. And in some groups and some sectors like the financials, we've seen the dips get bought up and bought up fairly aggressively here today. You look at some of the financials, they lagged yesterday. They're outperforming today. That's a bull market scenario, right? That's a bull market situation. That's that's much more indicative of a bull market than a bear market, where on a bull market, you get about a third of the stocks making decent moves on one day. The rest kind of lag the market. And then the next day, another third, kind of take control. And that kind of baton passing back and forth. So we saw, the baton strongly in the hands of tech yesterday, and then you see tech here today and what it looks like. And you go and you look at Adobe, you look at some of the other tech names. They have the exact same chart action associated here with them. And so for me, it comes down to volume. If there's significant volume, it's meaningful. If there's not, then it's okay. Just a day I got to weather, and and look to see it go higher in the coming days. Now with Adobe, granted, I'm running out of time on my option, right? It's not it doesn't have a ton of time here left on it, so I may have to adjust it a little bit into the close, but that's not something I'm going to make a decision, right here with the stock. Okay, Nike is one of my favorite in terms of this pullback. Adobe another one, Microsoft another one, in terms of just being able, you can go out and buy Nike right here. The risk reward with a stop on yesterday's low, it's a really nice risk reward, and to trade it to the upside. If you're bearish on Nike and you want to play it down, wait for it to break yesterday's low, and boom, there you go. You have a nice spot, or you can get in now and use yesterday's high as a stopping point. There's some decent risk reward scenarios starting to set in to various stocks out there in the market. So hopefully that gives a little bit of help of looking at some of these smaller pullbacks. That volume matters, and it's one of those things that. It's one of those things that definitely has to be that can help to really kind of understand the movement here. All right, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.